Hey guys, welcome back to BK Trading Academy. It is good to see you guys again. I am Brian Horton, professional trader, owner, and educator, and I'm going to be evaluating AUDCHF, which stands for the Australian dollar versus the Swiss franc. Now, I'm not going to use any indicators. I don't want to use any technical jargon. I'm just going to use straight price action. And if you are new to this channel, I did a 1-hour free price action and trading analysis course that you can go ahead and look at. But in the meantime, I want you guys just to understand this, guys. I know that sometimes trading can be difficult, especially when you have so much thrown at you. We have a lot of YouTube videos, a lot of content on just all of this engulfing candles and indicators and 50 MA and all of this stuff that can make you really intimidated. And so I want to make sure that when I evaluate this, I don't use any indicators and I simply use price action, just giving logic, right? Price action logic. So that is my goal for you in this video. So if that sounds good, I want you to hit that like button, subscribe if you haven't already. And in the meantime, guys, after you watch this video, I want you guys to look at our stories. We like to share our lifestyle with you guys. What are we doing outside of trading? We like to have fun. We eat, we play around, laugh, play games. And so in order to do that, you want to go to our profile, click shorts, and then I want you guys to enjoy. Feel free to like and comment as well. It just makes us feel good when you do that. Now, guys, here we go, evaluating and analyzing AUDCHF. Let's get into it. All right, so we always start off on the high time frame. We're looking at the daily time frame. We can go out and scroll out to the weekly time frame as well. And we do this with every single pair because we want to get a directional bias. The reason why we want a directional bias is so we can know how to trade it, right? Price is here. So one thing that we notice is a strong bearish candle, right? There are no wicks here at the bottom. So there is some strong price action happening. Now we're going to go ahead and drill down a bit. But before we do, we can look left and notice how there was price action here before, back in December, and then even here again in October, just last year, and we can see how price respected it. So 9 times out of 10, it can do the same thing. I like to scroll out a bit, just a bit more, and we can see what happened again. So I'm going to extend this rectangle line because I want to see what happened in the past prior to that. Now, it did the exact same thing in May of 2020, but if you notice below that, this was all pandemic levels, okay? So this was worst case scenario during pandemic levels where everything was in shambles. So that's why we have this strong dip to the downside. That's common, that's normal when we have something like COVID-19, a new virus, all that stuff happened, things were unsure. So we can see that CASHF took a deep dip to the downside. Okay, so right after that, it started to rise. It came back, retested this level. So this level right here is the normal level, and then anything below this level right here was because of COVID-19. So we get to kind of ignore this here, knowing that price isn't going to come down here 9 times out of 10 unless there was a big event, which I doubt anytime soon, or hopefully. So now we're going to fast forward to today, a strong bearish candle. I'm going to go down to the daily time frame and just kind of see exactly what's happening now. So the same thing, we have 2 red bearish candles here, and you can see that I have an alert here to buy. Even at this level, I would buy right now with the low lot size. Now, these are historical levels, so you can be safe and say, hey, you know what? I want to trade this X amount of pips or this X amount of lot size, knowing that you're buying at a good level. All right. And it's also safe to put another buy around this bottom area here as well. So you want to put your low lot size around where price is at now, and then another low lot size down here, or even a slightly higher lot size here as well. You will want to do your stop loss away from structure. And so because this is an obvious level to the bankers, you want to keep it away from structure. So I would say your stop loss would be somewhere, and I'm going to grab my measuring tool. So where price was at here, the lowest it's been in December, you want to keep it away for aggressive movement. Sometimes the banks like to stop you out and collect your money. So anywhere between 70 to 80 pips will be completely fine. That's around 0.6091. That's the price that I'm looking at for a good stop. And then market execution, even right now where price is currently at, depending on when you're watching this, and then you can put in another buy limit somewhere below, and let's say anywhere between 0.617 or less, give or take, right? So this isn't rocket scientist. I'm not using any indicators. I'm just using straight price action. Okay. And if you understand price action, that is the true key to actually trading. Okay. Indicators only follows price action. You will look at it like any other thing. You don't want to sell when price is already cheap. And now price is cheap. It is at a key level. So I'm looking to buy. Let's go ahead and drill down to a lower time frame. Let's just do 4 hours, right? And we see a few red bearish candles here. If you were to get in now, just know that price can continue to drop. That's just the nature. But also, if you get in now, you know that you're still getting in, right? You won't miss the trade because price can very well start to push to the upside from this point on. All right. So typically we like to wait for a wick rejection with our candle and start to pull up before we buy. But because we know that we're at a key level, put in a very low conservative lot size. We always say to risk no more than 2% of your account. And we use the position size calculator to break up our lot size just in case if price continues to the downside anywhere within this red rectangle, we know we're still getting a good deal and we're not missing any price. So if you put a slightly larger lot size at the bottom around this area, you will make up for any drawdown from your first position. Guys, it is very simple, nothing very difficult, not using all these fancy trading terminology and fancy indicators and things like that. You just know from price action. Now, let me just throw on a Bollinger Band just to kind of see what's going on. Price is obviously oversold, right? It is oversold and price is pushing right through these Bollinger Bands saying that price is oversold. I'm going to take this off right, and then I'm going to throw in a 50 MA. So the 50 MA is above price on the 4-hour time frame. I'm going to switch to the daily time frame. It's still above price, but guess what? When price begins to return, then you will see at one point it will go against and above the 50 MA. So you're actually getting in early. This is kind of considered a B swing where we enter at levels from 6 months or greater. So guys, that's pretty much it. Very simple. I wanted to get this out to you because sometimes we overcomplicate trading, and trading doesn't need to be overcomplicated at all. We just want to pay attention to our key levels like our support and resistance levels. Where does price test at multiple times? And I'm just kind of marking this area to tell you that this is a very significant area or a very significant price. Okay. So guys, I want you guys to comment and let me know what do you think about this, right? Just using very simple terminology, no indicators, and you will only use indicators as confluence, meaning that you are just confirming what you already know based on what price action is. And let me know if this is something that is doable for you, just less complicated. All the noise, all these different videos and all this different noise that you see and hear online may overcomplicate things. But if you simply understand supply and demand, support and resistance, which all ties into price action and identifying your key levels, you can almost all the time make a great decision when you're entering into the market. Let me know in the comments, guys. What do you think about this? I really appreciate that. Hit that like and subscribe button if you haven't already. It helps us out. And also be aware of fake impersonators or scammers. Make sure you click the link in the description below to know our real Telegram and our real Instagram, because we have people impersonating us. We will never DM you. We will never send you any message asking for money or saying we will trade for you. The only products that we have is on our bktradingacademy.com website, where we offer our online course and we trade live with you guys. And we also drop signals in our private Discord. Okay. If you're interested in our public Discord where anyone and everyone is involved, we will also have that in the description below. I will see you in the next video. Take care.